Welcome, friends. Asli Bania welcomes you once again. Today, we have brought you another multi-bagger stock for 2019. The stock is Fiberweb India Private Limited. So, it has recently expanded its facility and they are planning some more expansion. The multi-bagger potential of this stock is 16 times. So, let's see our standard disclaimer. We have prepared this report for educational purposes only. Before investing in this stock, please consult your registered stock advisor. Will not accept any liability arising due to investment in this stock. Fiberweb India Private Limited. Fiberweb is the first company in India to set up a spun-bound non-woven fabric plant. No, currently there is no major player in India. What is spun-bound fabric? Basically, it is used in baby diapers, sanitary napkins, then in crop protection covers, then in hospital it is used as mask and protective garments, and then they are used in luggages as lining, bed sheets they are used, curtains, pillow covers, then air filters, and in RO we have special liquid filters like water filters. Then in automotive industry in cars we have carpets and then bumper covers and then in geotextiles as well. So if you see it has a wide range of uses in several industries. So the key facilities are for spun bound fabrics is like Daman. It is 5,000 tons per annum and the capacity utilization was 92%. It is owned by the company. There is a unit 2 that is 2,500 metric tons per annum, which is leased, and the capacity utilization of FY18 was 90%. The other is melt blown fabrics. So that is the new one. The capacity is 3,000 metric tons per annum. It is owned, company owned. The utilization was 17%. This is basically because it was commissioned in the latter half of FY18. That is why you are seeing a very low utilization. So the other big thing is most of the raw materials are sourced from global oil major ExxonMobil, which is quite a big thing because then you are sure that the raw material is of good quality. And if you see the company, like 75% of the standalone revenues which are coming is coming from the exports to various countries. So that because one thing the uh, company mentioned over the con call is like they have to pay the money for raw material in USD, and since there is lot of products which are exported, so the money is also coming in USD. So what they say, because of this, because raw material as well as exports are in USD, so they are saved from currency fluctuations. So they maintain a dollar account where all the money coming in from exports are deposited in dollars and which is used to pay for the raw material. Now we see the consolidated financials. So if you see, since the new facility was commissioned in 2018, we are seeing a jump, and the EPS is quite good, which is around 12.6. The other thing is, if you see in the quarterly results, the sales have gone in and downswing, but the operating margin has increased. This is because what company has told, like for few products where the volume is more, which is like quite common in use, the margin is coming down for the company. So company is focusing on specialized project where products where the margin is higher, and stopping the production of low margin products. So that's why you see the sales have gone down, whereas the operating profit margin has gone up. So if you see the profit levels, so as compared to December quarter, it has not reduced that much. You see there is a reduction, like the top line has gone from 81 crores to 35 crores, which is around, say, less than half of it, whereas profit has gone down from 10.3 crores to 6 crores, which is, I think, 40% reduction approximately. So the margin is going up. The cash flow company is generating cash flow from their operating activities, and currently the lot of cash is being invested in the new facilities. This is due to, like, in March 2018, if you see, they invested a lot of cash in the new facility. Now, Fiberweb India increase in product demand. So let's see what are the prospects of their products, like the products which they produce, which go into production of various value-added products. Like non India's non-woven market is expected to grow at a 12 to 15% in near future, which is quite good. The personal hygiene market, like this sanitary napkins and diaper for babies, is expected to grow at 20% because the increase in disposable income and the population and increasing awareness is increasing the demand of these products. The geotextile market, which is related to construction, is also growing very well because it is linked very well with the highways. So you see there is a lot of highway construction which is going on. So it is also on the upswing. Then coming on to automotives, India will be third largest passenger vehicle market by 2021 with annual production of around 5 million vehicles. So this augurs well for the company because some of its products are used in automotive sector as well. And in the end, the packaging industry, which overall is likely to grow at 18%, with increase in this itself, the percentage increase share of non-one products will also increase. So flat bond project. So Fiberweb is planning to put on a new flat bond project. So this flat bond project will require around 90 crore capex, and the time frame from order to operational is around 15 months. So currently the company has informed that they are in touch with the vendor. They are developing the specification. Several round of discussions have gone by, and they are hopeful that in few months time the order will be placed, and when the order is placed after 15 months, the facility will be operational. In this, like 60% capex is financed by the vendor, and it is the euro our 200 basis point above European rate, which is which is in negative. So which is the interest rate is quite good, and 40% will be with debt and internal accruals by the company. So what company has informed in the con call is like this will result in 150 to 170 crores of top line growth, which the number depends on how the raw material cost is, and the company is expecting around 35% of the margin, but they have mentioned at least minimum 30% they will make from this project. Now, pros and cons. The company paid, like pros, first we'll go for the pros. Like the company has paid dividend for last year, and the current dividend yield is 1.56%. However, company has informed that they will look for capital efficiency, and due to like planned capex for flat bond project, they will decide that giving dividend is required or not. So probably what I think is they may not go for dividend this year and next year until the flat bond project is completed. Promoter holding is around 45.5%, and promoters are regularly buying from the open market. You can check at a BSC. The company is debt free for now, but the company may take on slight debt for the flat bond line. The company has started organizing con calls, and the con calls transcripts are being posted at company's website, which is quite good. So it shows that company believes in more transparency. The other big thing is the company's products are FDA approved. So the big US market is open for the company. And as I have already told you, that company is focusing on high margin products and reducing low margin products. So this in turn is lowering the turnover of the company, but the margin profile is increasing. Now the cons is like the raw material is dependent on oil price and exchange rate. Uh, it is not exactly a con, but it depends on the raw material prices. But since the company is having a huge amount of export, they are maintaining a US dollar account. So they are maintaining this very well. So final review for Fiberweb India Limited is available at price of rupees 32, which results in a PE ratio of around 3 and market cap of 93 crore, which is quite good, I would say, because looking at the future prospects and the earning capacity of the company, this the price is very good. The order intake, the company has informed us like the order intake for 90 crores and they are booked for next 5 months fully. They cannot take further orders. Um, the other thing worth noticing is like company has finished their credits, and from next quarter, like in the coming quarter onwards, they have to pay income taxes, so which is like minimum 30%. So that's why maybe you are seeing a PE of 3, because from next quarter onwards, there will be reduction in the profit after tax amounts. Because if you see last 2 3 years, there was no tax being charged. So the as per my estimation, the revenue expected after 3 years is 400 crores after flat bond line project is completed, and it starts generating the revenue. Net profit will after tax will be 75 crores, which results in an EPS of 26. So final verdict is like Fiberweb India Limited is at very interesting valuation at the moment. Minimum price expected is around rupees 520 based on PE of 20. It results in an approximate 16x opportunity from 3-year perspective. The risk in this stock is quite low, and probability of further fall, looking at the market like which is going towards 52-week high, so the probability of price falls is very very low. Friends, thank you very much for seeing this report. If you want to see further reports, subscribe to my channel by clicking on the link below the blue colored arrow. Thank you very much and see you next time.